there, everybody. My name's Allison Ostrander. I am the Director of Risk Tolerance here at Simpler Trading. And in this video, I want to talk about a potential setup in CPRT. Now, if you followed along last week with the daily videos I did then, both of those worked out nicely. LRCX has continued that trend move higher that we are looking for with the follow through on the weekly bullish divergent bar that we see back here. And the same thing happened with Apple. Apple as well got a very nice follow through with the bullish divergent bar on the weekly chart. And so depending on the trade idea that you took, that should have allowed for a nice profit. So now let's move on to what we're talking about today, which is CPRT. Now CPRT on the daily chart is a bit consolidated. We can see that the moving averages are all clumped together. We can see that the Bollinger Bands are still relatively flat. We might have some resistance up here at around 56 with the ATR trailing stop. Our lower indicators match up with that current consolidation. But what I like about this chart, and one of the reasons why I wanted to share it with y'all today, is that it has a great daily squeeze that's been setting up. It's had recent true lows on the daily chart, but on the weekly chart in particular is where I like this setup. The weekly chart has had a nice overall trend move higher, reached recent exhaustion levels to where that started to pull back. While that reset, the underlying price pulled back a little bit and then consolidated. You can see we also have had some recent weekly true lows, always a good sign there. A nice squeeze. Still some consolidating signals on the compound breakout tool, but momentum is starting to pick back up off the zero line. Now, I was actually watching this last week because we made a bullish divergent bar last week. I didn't jump into a trade just yet because I wanted to see if maybe after the holiday week we opened a little bit lower today to get a better entry, but unfortunately that did not happen, and we've already technically followed through with that bullish divergent bar. Great follow through rate on bullish divergent bars for the weekly chart, so not too surprised. I just would have been better, right, to get that better entry. But I still think this is a pretty good spot for a trade idea. The only thing I would be mindful of is, of course, with this weekly time frame, we might sit in consolidation a little bit longer. So I would overall give yourself time on the trade idea. So let's pull up CPRT here. And so a few different ways to trade this. It only has monthly expiration, so you do want to be a bit mindful of that. When the July monthly expiration goes, the August will be the next expiration. So you could go out here to August, look to jump into a long call. Right now at the money with the 55 strike is $1.45. So if we can start to trend higher in the next 30 days, maybe get that daily and or weekly squeeze to start to fire to the upside, this should start to go into the money and allow for a quick profit. If you want to keep your risk a little bit smaller, you could attempt with the 57.50 or do a spread, right? That certainly reduces your risk down to 93 cents, still allows for a $1.57 profit potential. The reason why I like the idea of a long call myself, though, is because we have both daily and weekly squeezes. So if they start to fire to the upside and really get going, I don't want to limit my profit potential with a spread, right? I'd prefer that long call. If you really want to make sure you have enough time, not have to worry about theta decay, then I would look at going out to the November monthly expiration. The 57.50 call in that case is only about 212. So if we can start to get going in this month or going into August with these squeezes firing to the upside, then, ideally this still has enough time on it to where it's not too affected by theta and can still allow for a really great profit to be taken. Now, I will say that my line in the sand currently is probably this 30 period simple on the weekly chart. Currently, it is at 52.88. If we start to see a stronger break below that, then I'd probably cut the trade. If there's any, capital left, protect it, and then watch to see how the ATR trailing stop holds. If that ends up holding at support at $50, which is also a nice psychological level, then that might be a place to re-engage. Of course, if it breaks that, then I wouldn't, at that time be looking at this as a bullish trade idea. But true lows can make for really good entries. The last time we had a weekly true low back here, we were priced around $27. And then, of course, we've had a very nice move up since then. So you could look to do this as shares so that you don't have to worry about theta. Or as I walked through, you could look to do this as a long call or a call debit vertical spread. I would, at the shortest term expiration, go out to next month. I think this month might be a little bit too close dated to really see a strong move get going. And if I were to do this month, which I'm not really inclined to do, but if you really felt the need, I'd keep it in the money with the 52.50 strike so that there's intrinsic value. And that way, if it only goes up to the ATR trailing stop, which is this red dotted line, and that's currently at 55.82, then the idea is you still might be able to scalp a quick win there based on what the intrinsic value of this strike would hold, which would technically be around $3.30. So thank you guys so much for joining me in this video. As always, my fellow Jedis, may the trade be with you. Please be mindful of your risk. Only risk what you are willing to lose. And I look forward to talking to y'all again next time. Have a wonderful rest of your trading week, guys. Bye.